Hey, I love you, buddy. Okay, starting off the day with a little gap down. So my estimation here is down, but it's not impossible here based on the way this is set up that we could just see that push. There's a lot of positives to this setup. So I think the big thing for me is watching a couple really key angles here. Hey, good morning. We're going to have I think we're going to have an eventful day either way. And then at least an eventful morning. And I think the rest of the day is going to be pretty much defined by just what happens this morning. So my expectation is down because of a lot of things. But the setup here is very similar to what happened on GME before it ran up to the 618 retrace. So it's not out of the realm of possibility. And keep that in mind because like I've got this set up in a way that makes it look like it's destined to go down, but there's a possibility here it gets a push up to the sixes. So yeah, yep. I agree, Chase. I do because I don't think down today. Well, first of all, like I don't think down means it has to continue down unless it doesn't hold at 491. That's kind of like my main thing here. There's a few other places I would look at it and say that it would need to hold, but yeah, 491 is kind of a big one, and then I think that's where we're going to kind of meet this other trend, this outer trend here, if we were to go down, and then it is a cat ear, so like it or not, that's the way this is set up. And it actually pushed, I noticed yesterday, it pushed up. It's kind of one of those things, it's like it just kind of depends on how you draw stuff, but like I think it pushed up here above that creek and then dropped beneath it before it closed. So we're in a call it like a hook territory where you could see it reject now and then head back down. So if we don't see it break high today, like above 523, then I'm thinking, and it'd have to break up here and then kind of hold that advance. I'm thinking that it's not going to go, and we're probably going to go ahead and see this break down. And like we talked about previously, this is sort of a, for lack of a better word, this is like a parallel channel, right? So you can see like we're kind of testing the top of that channel right now. And I can make it bold. So it's heading down. And previously, when we did this motion and on the head and shoulder, giant head and shoulder motion, when we did this would be like a downward motion. There's no, the main precedence for an upward motion here is what I think a lot of people are looking at is they're looking at that GME fractal. They're not wrong. There's a lot of similarities there. And technically, this is where I'm at. I'm like, yeah, I mean, technically, it doesn't really matter what I drew out if the head and shoulder, or if this, let's say cat ear structure, whatever you want to call it, breaks high here, then it can advance, and you can have a pretty strong advancement. So there's a possibility that this gets a secondary push back above 572, But it really could go, I mean, as high as like $8 if it can find the advancement here, just based on, again, the way it's climbing in the range. That's like a hyper bullish scenario, right? So you don't have that back up to the gap fill. This would be like a breakaway, and it is very high volume. So I mean, it's, again, it's not like out of left field, you know. I could tell you what I prefer, but I don't think that you're gonna like what I prefer. I've already kind of talked about it. So like a lot of people are looking at that GME bottom that we had over here, and they're saying, and I think rightfully so to some degree, they're saying that it looks really similar, if not exactly the same, as what we're seeing on AMC here. So I'm like, yeah, I could totally see that. I mean, and as a fractal goes, it looks pretty darn close. Like not exactly 1-to-1, but pretty darn close to 1-to-1. I don't think you could argue that. It looks pretty straightforward. Bounce. There's that downward motion. I mean, this is the same kind of stuff we've been talking about. And I know I'm taking my eyes off of it for a minute, but just trying to illustrate the point here. Like, this is that same motion that we've been talking about very frequently on here for a while. And like how if you can manage to push higher here and then find support, you're basically done. And like that's kind of the general idea. We were thinking this might form out a larger bottom. So this is like a micro and this is going to be like a macro of the same thing. And that didn't happen. So when you go to like AMC and you look at this bottom, it's pretty easy to see how like that could be a similar comparison. There are some market differences, but that you would have to consider. But on the whole, it looks pretty much the same. One of the things that kind of bothers me about it as like that kind of a bottom is there's no peak. Like on GME, there was a peak here early, and then it doesn't ever make higher highs again. So oddly, like the one on AMC continued to make higher highs. It's not even really clear, in my opinion, you know, where that peak is actually supposed to be. And at the end of the day, it's like, well, we're just kind of playing guessing game here, you know, about where it could go, or where we could put that motif. I think it's really important though, because that bottom appears all over the place, and it's a really good bottom to trade if you can trade it. But in terms of like, where does this fit currently, and is this now doing the same thing that GME did? I think that's a big question, you know. I don't know. I don't know. I think you could say like it's pretty much the same. My concern is that it didn't really make any kind of, like the cat ears are really high, if that's the motion, and it just kind of kept pushing and pushing and pushing. And I've just got to be like straightforward. To me, it looks more distributive than GME's. If I were just looking at the two, that last couple of push-ups on AMC does not match these two, and that to me like really bugs me because they pushed higher as if they were trying to get sellers involved, you know. And that's when, remember when we kept pushing up to like 485 and then 5. So that's really where my confusion lies. And then like, it's not impossible that this forms a distributive top like this and then heads back down. And the fact of the matter is that this lovely gap that they left, the institutions during that roaring kitty bit, that creates a big question mark too, because this shouldn't surprise anybody, but if you remember, there's been a lot of setups like this in the past. And the big thing is like right here, you know, like this motion can really make or break. So here you can have this kind of react and basically SOS and go, or you can kind of just drop. And I don't know what else to say other than like look at past examples, because just like everything in AMC, like there's examples of both, right? So there's some folks, one in particular on our Discord group, who's been kind of putting out the fractal comparisons. And I don't feel like there's anything wrong with looking again at GME in this instance and saying like, well, it's pretty darn similar. And I'd be like, yeah. And I guess, you know, you look at the levels it's holding, the advancement, and where would I say that is? Again, it's like, well, it's on these parallels, it's on this localized little SOS, and then it's on this top at 573. So like you can look at this without being like, without doing like a super strong like fractal comparison, right? And it could look really good. But then notice, like, I mean, I don't want to use this example, but I guess I have no choice here. I'm going to have to use a couple bearish examples just to show you that, like, just because it sets up that way, right, does not mean that it's going to run. And I hate that for people who are, like, convinced that this is going to do what GME just did. It might. It might not. So when I look at this, yeah, part of me sees that GME comparison. Part of me sees this. You know what I mean? And if you're looking at it, it's very similar. And it was, a lot of it has to do with these, this motif of like backing up and stuff. But like, notice the end. That's really what we're most concerned about. And I think, again, it's kind of like, it's different because of like a lot of things, right? So like if you look at the GME one, we just looked at that a minute ago. You know, this holds pretty high. So it is like an SOS because it's building not inside the range, but it's building above. GME actually did pretty much got its gap fill, got really close to it. But then you can see like the levels of support that are held are these kind of critical levels that we dropped back here. When you look at AMC and you look at like this past comparison, for example, this is just one of those things. You know, you can see back here, similar, right? Build out. And then notice at the very end, that up thrust motion. And then the dropping of the cat ear. So like, this is one example. It's a big example. This definitely makes it look like you're about to just tank, right? Which is not fun, but not out of the realm of possibility. I'm just showing you an example. I think it's relative to where you are. So again, it's like these are things that were clearly established as creek supports and stuff. Like when we were making these moves, and in the end, like it just pushed too high and then dropped. And this is maybe not the best example, but this is one of the examples that you could use. That's very similar to the setup we have, right? It's not the same as this GME one, but then if you go and look at them both, you're like, yeah, I can see how, from a fractal standpoint, you could use either one. So again, like the GME one is possible because if you get the break here and you show some strength, you've made those moves. You know, I think that it held pretty strong back here. So it's looking good. It's not like it looks bad to me. Not particularly bad. It's just looking like we haven't made the move yet, you know, up or down. It's kind of like pinched into the corner here. And that's typically what happens right before you move. So I'm kind of waiting this morning to see what happens. And a lot of people are going to be in anticipation of like just more upside, right? Locally, I would say the RSI and MACD don't look good. They kind of rounded off while we were coming up, and you do have some divergence on the lower time frames. On upper time frames, I don't really see that as a big deal. Like it's not really like there. So mixed bag there. I don't really feel like it's a huge deal. This is another example. Really, there's two examples here, but this is probably the better example. So here's one where you actually did get a push that went quite high, and you had those parallels, you know, after this kind of like shallow S-curve bottom, and it does bleed down to a new low, and then it gapped up. And you remember how it was back then I was like really concerned about that, because I was like, well, you could have it bleed up and then basically fail. This is an example of like a double up thrust, you know, where it looks like it's going to advance, and that would be like us going up to $5 or $6 and then just crashing. You know, if you're going to do the GME comparison, which is really just this motif right here, right, then it's necessary. And GME's pushing really hard, by the way. It's going way up. It's funny because like I think it's going to hit that 34 and maybe just keep going. We'll see. But I think there's a decent chance this is just kind of a secondary push, and then we're going to move back down. Again, we'll see. So like I'm not going to try to spat on anyone's parade here who's expecting this to go to like $8 suddenly. But on the basis only that it's somehow following the GME fractal, I would just caution. Be very cautious, because there's plenty of times where this setup does not go bullish. And I've already picked out like 2, but this is another example that you could look at, and it's, again, it looks really bullish. Like, and these are like the EMAs and stuff as well. Like you've got a dip beneath, and then of course it comes above, back beneath, and then it actually looks like it holds the EMA, it advances. And this one's really nefarious because it came all the way back up as if it were going to SOS here, and it ends up just being distribution. Well, how do you know? How do you know it's distribution? Well, back here, like the only way I could tell was when it broke that was like $7 at the time. That was like the main thing. Is like as soon as it broke that, I was like, all right, well, it's done, because it can't go back beneath like a creek on a backup like that. And really, like typically that's about a 50% retracement. And so if it advances and then retreats more than 50%, that's not a great sign. It doesn't mean it can't go that low, but usually it's about 50% retrace. And that's typically about the same place you're going to lose a creek. So what I'm saying is, it ain't over till it's over. Like, you might look at this GME fractal here and say, well, it has to go here, right? But just be mindful, because if it stops high, right, in this pocket, okay, and you see something like this today, maybe it does break all the way up here, and it stays really high. And I'd be really cautious if it doesn't make any kind of, there'd probably be like a secondary up thrust, and then it would go to like a new low. Just be really cautious of that, because if I'd be really cautious if you don't see this make any kind of attempt to check on the way out. Because that's another thing that we see during the distributive cycles, is that we'll get a push. It just goes straight up, and there's no back test. There's no effort to like try to check for support. Okay. So right now I'm looking at this kind of like pinch point area, and then this parallel obviously to me is pretty important. And then I'm going to be looking specifically at the top if it breaks high. And again, you want to be pretty cautious about this read, because it could push and look like it's really, really bullish, and then it would suddenly turn really, really bearish if it's a distribution. And I mean really, really bearish. Like, I think we'd be going back down to fill the gap and then potentially continue down, unfortunately. So what would be better here is to not go all the way up. You guys are like, no, I want to go up, Booksy. I think if we don't go all the way up and do this distribution, this to me would signify, if it did that and then broke down again, I mean, just being straightforward, like this to me would signify a probable larger distribution. And I mean that with all the regret in my heart. Like, I think this would probably signify that we're going to head below this range more than likely. And there could be a change of character as soon as you get below a range, but yeah, like it'd be hard for me to make a good argument. I think we'd be probably heading really low. You know, probably back down to that previous top over here. I think it's like right around here. Yeah, maybe this guy, 373. That would be hideous, I know. And you guys are like, well, I don't want, that's not going to happen, Booksy, or whatever. I don't care. I don't care if you think it can't happen. It definitely can happen, and it has happened on AMC. I don't want it to happen. The bullish scenario here is that you don't do this. Instead, you basically properly SOS right here around 575, and then you advance again, and I think you can get to $8. So there is a situation here where you can have a decent move. Like I said, there's a lot of ways to maybe monitor this, but typically like the breakdown, no matter how you measure it, like the main breakdown here, you probably won't be easily able to read this with a backup, but it would be right here, if that makes sense. So like when you get to that point, if there is a push up and it comes back down, that's where you'd want to look. And we can pretty easily identify that here. I would venture, yeah, I mean, I guess if it kept going up, it'd probably be, it'd have to be really fast. It'd probably be this pocket at 5. I mean, it'd be like a $5 move, more than likely. We would have to look as it happened, because I don't know where the top is, but yeah, the 0.5 is at 5. So like it makes sense. So if we went to $6, it looks like the intersection here, these two creeks, is right at $5. Another thing I wanted to kind of point out, again, just as a cautionary tale here, is that, so like again, like that fractal that people are looking at because they're seeing GMEs move and they're saying, well, it looks really similar, right? This bottom right here looks really similar to what we're seeing here. Well, remember, GME just kind of gapped up and it came back down and found support near the previous top. And it also went up above on these parallels. Technically, GME gapped up and went up above on parallels too. Remember, these parallels are like really different from one another. Like AMCs are really steep and GMEs are not. So I think people were assuming here that we're behind GME and we're missing a move, but it all moved together, you know what I mean? Like maybe this is like a behind thing where it's like, oh, it's the same fractal and it's going to go. I already kind of demonstrated like that's not always the case. And the fact that AMC was on a rise here does bother me. You know, I don't think that's particularly super positive, but whatever. It doesn't have to be bearish. It's just not my favorite. And then GME has jumped and advanced these like parallels, and we're thinking like, well, AMC didn't do that, you know. That's not actually true. Both of them jumped that 50% parallel. I've marked them off. It's these heavier lines in the middle, and they both set up this little range along those 50% parallels. So if you do the measurement down, this is your 50% right here of that move. And so it's this lower parallel, and that's where it jumped. When it gapped up, it went above that parallel, and GME did the same thing. It gapped up, and then it went above like the 50% parallel right here. So you might be saying like they didn't move together and AMC's behind GME. People will argue that. I'm here just to caution you that that's not necessarily the case, and if this just starts coming down, I think we're going back to the 430, which was kind of a given. And that was my original idea anyways. Meaning my first idea was that we probably would see a distributive kind of motion here and then head down and go back to that gap fill. It's better for us to not do this early advancement. I think this early advancement would signify probably a sell-off is imminent and that you're going to end up coming really, really low. I think if we drop right now, there's less of a risk of a super serious sell down. So this to me is like pretty distributive looking. There's a peak. So anywho, that's my thoughts on that today. And if we go down, it's not really bad. It's just different. And probably today would be chop. We would drop here and then chop a bit and then probably go down again going into Friday. Yeah. So I think right now it looks like it had an upthrust and it's failing. It came back through. So that's kind of where I'm going to sort of park myself at the moment. Is it looks like this was an upthrust after sort of a mild distributive effort, and then it came back down beneath that trend. So yeah, so I think we're gonna probably, I don't know, if I had to make a guess, I'd say we're probably about to distribute at least down to here. Hang on. It's like a rising head and shoulder kind of. Yeah, we may be heading back down to 491. We'll see. It's not over till it's over. That's always the way it should be thought of in the market, because things can change rapidly. This to me looks really distributive though, that push up and then breakdown beneath that motion. I don't think that's a backup locally. It's too high. So yeah, so we'll see. I hate to bum people out. I know folks were expecting that. A lot of folks are expecting that $8 move. I'm not really sure who grabbed onto that fractal first and said, like, I think it's like this. But just remember, like, everything's dependent on this break here. It doesn't matter if you're like 100% convinced that it's going to go here or not. Like, it has to push this area, and then it has to not distribute at 575. So there's a lot of question marks, right? That the fractal doesn't tell you, right? It's kind of like I don't know. It's kind of deceiving when you just look at a fractal and you think that that's that. It's like, oh, well, it's got to do this then, right? Well, no, because again, like it's just a matter of going back and looking at previous examples of similar areas, and like just because it pushed up here does not mean it has to continue to advance. And technically, like I was talking about these parallels, like GME really hasn't either. The parallels here are different. You know, they're a lot wider. This one, I don't know why it keeps moving. I think because extended hours, but it's still within that same parallel group that it's been in. It hasn't really advanced, and it didn't come back up to the peak again. So like for now, if I were looking at this like as a head and shoulder motion, I would assume that it's probably going to come back down. GM or AMC really looks like that to me. So I'm in a hedge play, by the way. I don't want to make it sound skeezy. When you say the word hedge, people think it's like evil or something. But I'm hedging because I thought I had shares, remember? And I thought that if I were going to see an advancement, the shares could take me. And that's fine. I'll just keep those. And then if not, I want to see if it's going to go back down to 430, I want to see profit. So, and my TA was very straightforward here on the most part. I don't have that little diagram. We can look back at that later if you want to and just compare. But my thought was that we were going to go to 520 and then come back down. So far, that's kind of what we're doing. So that's the way I'm trading it. You have to trade your own plan. But if you were trading to the upside here, you would think about, where's my confirmation? Where's my breakdown levels? How do I know if it's going to continue versus like not continue, right? That's really important. And if you don't have that stuff in your head and in your trading plan, you'd be caught off guard. So could double bottom at 5 here and have a pretty decent reaction back up. But this is just me reading the chart. On the 15-minute and 6-minute, there was a downward divergence, bearish divergence on RSI. I left the blue on the RSI because I think the RSI is going to end up being pretty close to what we expected for the most part. You know, the downtrend kind of bit here is a little wonky. It probably should be a little lower. I'm looking at that moving average though, not like the sort of the live RSI, more like that trailing kind of moving average price. So yeah. So what I did on this chart is a little different than the other one. So I'm going to bring this up. So this is kind of that motif that I'm talking about, and then the possibility of us having another rise here could depend on us getting a retest on 431 and not breaking it. Again, we've got different scenarios on these two screens that you're looking at. If you're wondering why I'm not talking about GME very much, I had a high target here at like 34, and it looks like it hit, and it's kind of retreating. So I don't really see much else to say here that hasn't already been said. Like, this is that waveform, and it came back up. It did find support late in the day. It went real low here, and it looks like it's following it back up. So in terms of like targets, did we hit did we get pretty close? Yeah, we got pretty close. If you had traded it up to here at like 32.50, you'd have been good. You know, and you could have maybe traded to 34. I think the 34 is probably this guy. And I actually deleted it, I think, for whatever reason, but yeah, so the waveform pulled back up, jumped the creek, right? And then you could see the advancement here is really like an advancement between the two waves. This is the kind of stuff that makes it, I mean, in my opinion, gives you a good targets, makes it kind of easier to trade. It's just kind of paying attention to where those support and resistances are, and then it gives you an idea of like where you might go later. Squiggly line, right? So if we finish this wave, it would be like that. That's kind of the way I would see it. And then if it can manage to hold above this guy, you might be in really good shape. But I wouldn't have, this was my conservative kind of like low point target here. And that's where you're going to meet sort of that contention. And that's where we are. So good on us, I guess, right? Not much to say about MPW right now. There's a creek that hasn't been checked back here, so, you know, I'm a little nervous that this is like distributive. I'll have to kind of like look at this closer maybe later today. Like a little nervous this could be a double top that slides down. So want it to kind of continually hold here. I don't know at this point. You know, FMC's coming up. It's hard to say. Maybe this does come back down, you know, into FOMC, and could be a really nasty like long-term backup before like a bigger move. Seems possible. Come back down here to Monday. At this point, I probably just watch the EMA. Let me see if there's a better one. Is there one that's like closer? Oh, those are way down there. Nope. They're all kind of way up high. Meaning everything's really far away. So yeah. That daily is really close. Yeah, so maybe a gap fill could get you back down to here, but it's kind of like anything else. You don't really want it to go back down too far. 526. It's pretty close to that 530 level already, so I'll just add an alert there at 530. So if it suddenly drops, then I'll know, and that'll be that. So anyways, yeah, so GME is kind of where we thought it might be today if it were to advance. I had a messy day yesterday, kind of a failure to advance a couple times here, and then deeper retracement, and then it pushed up. I would say it's probably done, but if it holds the, like this would be, the rest of this could be just like chop until down. But if it can hold this level, it's not really like an S, it's not like, let me explain. Like there's a possibility that this is sort of your SOS. It's also a possibility this is just more of your auto reaction after this kind of early drop. And we talked about it yesterday, how there's expansion of idea, like when you look at the micro versus macro, you can see like some of these are going to look like there's something really big, and then you zoom out and you're like, nah, it's pretty small, it's pretty mild, as it were. So hard to say. But what I would say here is that right now I don't really feel like there's really anything to look at particularly. So if it breaks above the current trend here around 34.40, makes a new high, I would just keep it simple. Then it might run up to the top here at 40. Because there's nothing really else to look at. I mean, you have previous levels over here that you could look at. They're kind of already where we're at. There's a big gap up here, and that's the same thing we saw. There's a massive distance between these two. So it seems like you're probably just going to advance right back up to 40 if you can make this push to the upside. There's a parallel that comes a little lower at 37, so maybe that's like a first stop kind of thing. But then after that, you would just go, and everything else from here looks like it would be sideways and down. So this is a parabola, and typically on a parabola, when you do get that breakdown, because it doesn't usually stay in there, you return to like a previous trend. So there's like two that I would look at. One's kind of short term way over here, and then one is a little longer term way over here. So maybe if it breaks down here and doesn't hold, it goes back down to one of these trends. This one seems kind of likely to me going into a Friday. If it doesn't just have a full capitulation, I think this is possible. Right back down to like 30. So AMC got a little pop at 5. That was expected. I said, it could have a double bottom kind of motion. At this point, maybe the divergences aren't the best thing to look at because there's not really, I don't think there's any really high time frame divergence. So it's like up to 15, I think, and then maybe 30. I don't remember. The double check. Yeah, maybe. This kind of looks like a double top, but I think it's slightly lower. So what's that? 531. 531. No, it is a double top. Yeah. So, yeah, maybe. We'll see. Those are two very contrasting candles on the 30-minute. Gravestone, followed by a doji, or a hammer. It's not over yet though. That candle's got 30 more minutes or 20 more minutes. This is funny how like quickly like it could change, you know. So probably just looking at this guy and just seeing if there's any kind of a hooking motion. There's not really anything else to say right now. There's a whole lot of gobbledygook right here, and I would probably have to look at the micro just to see what's going on AMC. Yeah. Well, I guess we can just do it. I can't really tell. I mean, it looks like a rejection. I just mean like I can't really tell where any of the creeks are. It's too much noise. Well, you know, this doesn't make it look so bad. It does have that kind of vibe of like a triple top, but maybe the, I mean, like a head and shoulder, but maybe it already made it. I don't know. So your neckline would be here. I mean, it definitely broke below it. It's coming back up right now. There's a really steep high creek here. So that would kind of propel you potentially back up pretty high. But I think the drop off, even though this goes way up here, the drop off is probably like 515. I'm looking at like a liquid center here. Can't really tell. That one's tough. All right, so that's not very helpful. So what I'm doing now is I'm looking at this structure as it is. You can see the angles on it are pretty simple to follow. And then if you look at the so these early supply points, they're also giving you an indication of where you might be hitting. There's another set of parallels here that I was using as well. I think those are the bigger picture ones. So we're still riding high, like we're still way up at the top of this kind of rising parallel section here. We haven't broken out. I don't think that's a question that we need to ask right this second. We kind of pushed up high and then we rejected on it when we came back down. Yeah, might be like an inverted head and shoulder type setup as well. So again, that's not really any different than what we talked about. It's like still in the same zone here, 530s. That's where I've got my marker anyways, so that'd be like if you came up here, potentially that's an inverted head and shoulder break. So you might go the other way, this way. And that, I think it's probably going to give you the same exact target or really similar. Like I don't feel like it's going to be that interesting. I'll just kind of do an average here. So 32 cents. Okay, so it gets you back to that marker here. Now that you could make a stronger argument for because GME went to that same marker here, though it came up pretty late. And this is an inverted head and shoulder target back up to 565 basically. So if it breaks 536, you might see 565. So that would be a good trade. Easy enough trade to make. It'd be interesting to see it jump that and sit above. And have to go up there and break it though. Head and shoulder targets don't just, you know, you can't confirm them until it breaks the neckline. So in the event that it's kind of a rising head and shoulder motion, you'd have to see it break that rising neckline, and vice versa with a falling motion. It just depends on the setup. So you can't confirm that until it happens. You guys are like, well, yeah, duh. I mean, you'd be surprised, man. I've seen a lot of people tell me that things are definitely going to happen because they get a target, and you're like, well, you just don't know. Like, you don't know until it breaks out. And by that point, you're thinking that you've missed the trade, but that's the trade. You know, if you're trading Volkowski method, it's a 5.5% trade. It's not, I'm buying in here and hoping it goes up. Of course, that could happen. You could get in a good early position and go. But just in terms of like the efficacy, the efficiency, I guess you could say, of the trade, that's really like the actual trade is up here. So, I mean, that might bum some people out. They're like, that's not enough. Yeah, but statistically, like, that's where you're going to get the best return. Like, you're going to get the most consistent return right here if it gets that move. So, all right. So, like, I've got these rising parallels. I think there's a decent chance for either one still, because even though this looks like an up thrust to me, it did double top. It didn't come higher. That makes me kind of wonder. And then we got a lower low, which is not typically good. So if I'm going to give you, like, what do I think is most probable here? And stop beating around the bush. What seems most probable is that you got a double top rejection at 531, and the second top immediately made a lower low. That being said, did it come beneath preliminary? So I would just say at first this looks really distributive. Like, that to me would be like, yeah, it's probably going to go down. If I look back at this, I'm like, well, the lower low on that double top is bad, but it didn't come. That's a sign of weakness usually if it's kind of already gone back up to the top. But it didn't come above, so it kind of leaves the question of like, did it really breach the buying climax? No. And then I would go back and look at the preliminary supply. That's over here at like 489. So it didn't go below preliminary supply on that drop. So there's a sense in which there's still like a creek holding here. So just like GME yesterday had that deep drop, right? It kind of double topped, and then it had that deep drop. You know, you look at that preliminary supply way back here at 28, it didn't really come below that, and it was just a retracement. So there's a sense in which there's still a creek holding here, and I think that's probably a wise place to kind of sort of hang your hat for now, is like, well, it's not bearish necessarily until we get back below here, and then I look at preliminary supply, even though this top doesn't look great, and it did sell off. I mean, it's not like it didn't have a sell-off motion. The concept of kind of like a quick spring wouldn't be unusual. So like right now, this is one of those days where you're going to hear me go back and forth a lot because we're in a cat ear setup. We have a potential, I think, to come down pretty low. I think if we break beneath 491, we're probably going to just start chopping back down towards 430 in the end. There's a secondary kind of motion here that could provide a push, and that is if you get above the recent top at 531, but ultimately like above this kind of neckline up here at like 537. I think at that point you're probably safe to say, yeah, we're going to go to 565. And then at 565, you have to watch, you know, an extension beyond that could result in, I don't want to say catastrophic motion. That makes it sound super dramatic, but you have to kind of watch. Because I did a couple demos early. There's certainly a possibility it advances. It's not like that's out of the question. The 618 retrace on the downward move on AMC, this downward move is way up here. It's near $8. I think when folks are looking at this fractal, they're looking at this bottom and they're saying, well, it looks just like what GME or what AMC is doing right now, so it has to do this 618 move, right? they're just different. The gaps are not the same. They weren't left in the same spots on GME. Technically, like these parallels on AMC are steeper, and we've already jumped the 50% parallel on AMC. That was the same motion that GME made right here locally. Does this look really bullish to me? It could be. There's really high volume in this push-up. A lot of the volume is in some of these peaks, which I don't like, but once it gets to about the bottom here on the 5th, you're seeing a lot more volume in this bottom here, which is good. So that's a positive. Then from there, it's kind of like, I don't really see how you need to go any farther, if that makes sense, without coming back down. This has not come back down to check this creek. So I still think that even if it went up again today, there's still going to be some eminent downside on GME. And this is about where my target area was. We're sort of topped off. This is a 15-minute, kind of topped off on the 15-minute here on RSI. And then AMC had this push up this morning. It double topped at 531 and it sold back down. If you think this looks like a cat ear, you're right. It is a cat ear. So we talked about that motif yesterday all day. And I talked about how you could have it. I don't know why I deleted that. I keep doing stuff like that because I don't want my charts to look really cluttered. But it's literally the same thing we drew out yesterday. And I'm not copying what you're seeing over here. I'm drawing what I drew yesterday, which is basically like that you create these kind of rising tops, and they eventually like will fall. And what they look like is a cat ear on the top, right? And then when you go back and you look at, I did a little more detailed yesterday. I did like a little head and shoulder here on this one. But when you go back and you look at it on the big picture, it usually has like a series of like kind of parallel advances. And this is where you get that, what seems to be like a wedge, but it's really like the top of a wave. And it's a distribution. And sometimes you get this up thrust at the very end. Happens a lot. And then you end up dropping through. Yeah, and that's sort of the way I'm reading it now. Because the setup didn't come low just yet and didn't break below the creek here, I think it's not out of the question to just kind of hold off on making that assumption that it's going to continue down because of the way this held. So normally at this point, you'd be like, well, what comes next? And then it's iteration after iteration. So like yesterday we talked about how this kind of looked like that top forming right here. And I don't want to be like a broken record here, but we talked about how this guy sort of looked like the whole top. And I was like, well, it's not impossible based on where AMC was that was it, and that it's not going to do another advancement. I was very much a broken record yesterday, and I kept saying that I really thought it was probably going to have a second advancement. I thought it so much that I traded it. I traded it from down here around 496 with options up to about 520 right up here. So I basically traded center liquid to center liquid here yesterday because I thought it didn't quite look right. Like it seemed like we were missing a move. And I made the assertion rather, not an assumption, but that I thought pretty confidently because of the setup that this is actually what we were experiencing. And I mentioned that the fractals that you see here should match like the bigger picture fractals. And they do, because it's iterating, meaning like you're seeing a smaller version of a motif. Eventually that stops, and it stops when it gets to the top that it's going to get to. Volume will usually tell you when something's changing. You know, in this case, we had that RSI dropping ever since the peak, you know what I mean? And really it was dropping even before then when we went up. Things like that can help be a little bit of an indication that you might be at a top. And it might not look like this, where it just kind of boils up and then advances again. You might see something a little more like choppy or distributive. So this is kind of where we were yesterday, and then today, right now, we're very much like getting blocked off by this creek action. So anyways, so what comes next is not bad, but not good either. It's kind of just sideways usually. So typically if you've done this motion, this has kind of helped define this upper range for you. At this point, what I would do is, and I haven't redrawn it, so I did this once. I did this on like back here when I was being real silly and just making like a bunch of doodles and saying like, here's what I think is going to happen. But what I would actually probably want to do is at this point, look at this area. This is the more likely going to be, I mean, it's hard to say exactly where it is. It's always like a game, bit of a game here, because there's other markers here you can use, and some of them play out a little better than others. We could just kind of eyeball it, just use the wicks for now, leave it at that. So this is kind of like the main, I've got all these little lines drawn. Those are just for my reference for like parallels. We don't have to stress those as much. That's just more of like an internal structure here that was rising, and I wanted to just kind of make sure that I visually could see that rising structure with those parallels. But if we're looking at the creeks, let's like de-emphasize those a little bit so that we don't get confused. And I think my cat needs some water, so I might need to take a little 3-minute break here and give my cat some water. All right. So yeah, we don't want to completely get rid of them just yet, because I think that they could play into like some support levels later. But for now, like I don't think they're the most critical thing. So we're going to kind of de-emphasize them a bit. We're going to look at this guy because the structure here usually sets up that this is the wave 1. Remember? So we talked about these cross patterns and how if that's your peak, this is now the cross. Does it make sense? Yeah. Was this like in the middle of the lower wave? Yeah, it was the middle of the lower wave. So this could make sense as a potential peak. Doesn't have to be the end of it. You know, it could still go further, but at least for us, these two, like, because you can see, like, if it pushed up again, you know, over time, this could still yield like a really similar kind of result where it comes up to here and hits or whatever. I mean, it's not like it's, again, set in stone just yet. We're kind of waiting to see what happens right here. But I'm just talking in generalities. I think this line that we originally drew was probably pretty accurate. This was yesterday. We were looking at this guy rising. We looked at a few. That was one of the ones that I said is a possibility. And then you can see it's about the center point of the bottom wave. So that's kind of where I want to hang my hat for now. And I know I said that already earlier, but if we're going to get a good bead on the range, we need to like understand the motion of the wave. And this is what the master fractal is it's a shrinking iteration across a waveform. So that marks off the first wave, and then this is the cross section, right? And then we don't know if we're going to go up any higher, but for now, like we could say like it basically reached that point. Maybe that's at the advancement, maybe not, maybe it goes a little higher, but for now, like that's what I'm going to kind of draw. You know, and like the best case scenario for most people would be like this coming way up here. A lot of people want to get that 550 or 6 today, but in general, I think again, it's sort of, it hit where I thought it was going to hit. You see some distributive action here along this parallel. In general, I think it's pretty close to done. So then you're like, well, where are you going to go next? Well, it's not complicated. At this point, if you've set this up correctly and you kind of understand the motion, and the reason that I did this, and I'll use what's already here, is these 2 points, right? This is kind of what I'm looking at, because I think that these waves are defined when they come across these creeks. They back up to the creek, right? And then they advance again. And that helps you to see like visually, get rid of that one, where that is. So that's the reason I'm drawing it where I'm drawing it. Okay, so now it's like, it's not really a difficult question to answer because you're gonna come down more than likely in the next wave if you cannot advance, meaning it can't hold support like higher. So unless this happens, right, and it's not out of the realm of possibility, it's just that it has to hold up here, right, or above this creek, I would say. Unless that happens and you break out and you then advance further, in which case you're playing a smaller advancement, right? Unless that occurs, you're probably going to head down to the previous creek again, because that's the place that, we would go. Makes sense? Then we can look at stuff like supports and resistances and yada, yada, yada. So I'm going to take a really quick break. I got to go help out the kitty. Hold on. All right. Okay, let's take a look. Reese says AMC fail at 570, then retrace at least 15% before continuing, maybe as far as 430. Yeah. Well, yeah, that's the level, right? So 505 is that level. Makes sense. What do you think about Pantano thesis that are all-time lows not yet in? Never say never. That's what I think about that. So if you're asking me if I think it's technically possible that it makes a new low, the answer is yeah. If you're asking me if I think it's the most probable outcome, I think the answer is probably no. But so, like, first of all, we were just talking about this. you know, as a macro picture, that this setup, it could represent, and we've talked about it a lot. I mean, I don't know if you've been on my channel quite a bit. But you have a I just don't know what to tell you, except like the creek below, while it was barely tested, it wasn't like super tested. If this is a breakaway gap, we may not fill it for years. I mean, that's just the way that gaps work. If there's a huge amount of volume, and there was, gaps don't have to fill. So like just the gap itself does not mean you have to come back down. But what I would say is like the gap is one thing, and it's not like people will say stuff like, oh, it's going to go fill the gap and then go back up. Well, my bigger question is, where is the creek? If the creek is at a place where filling the gap drops the creek, then it's distribution. If filling the gap doesn't drop the creek, then it doesn't have to be distribution. Okay? So let me repeat that. If filling the gap drops the creek, and there's a little more nuance to it than that, but if it drops the creek, it's more than likely going to be a distribution, especially given how high we went to begin with. If it doesn't drop the creek, then you're still in a possible place where you could recover. In our case, it's possible if we were just to suddenly drop, and the longer this goes on, this will change. Okay, this is really important to mention, because the creek is not necessarily like as high as we want it to be. It's kind of low down here because we jumped over some resistance real low down near the 3s, and we never really checked it, right? So this was like kind of the last place that we had resistance, and it's right here. And if you're asking the question, did we check that resistance? I think the answer is no. We had a little back up to like 320 back there, and then that was it. And then it's a breakaway. So does it have to come back down to fill a gap? No. But then the question of the creek is also still a question. Has very little to do with the gap at that point. So at this point, you're like, well, did we ever come back and check that area? And the answer is no, we really didn't. So if you find a support earlier, and that's kind of what we're doing right now, is like if you can build out a support higher, you may not need to, you know. But this on AMC has only really ever happened, I mean, I'm just being straightforward. It's only ever happened during like markup phases, either on a really small range or on like the macro level. And we've really only had one of those. And that was the reaccumulation after the January move. That's it. But the thing is that actually did come back down and check the creek, and it was much higher, yada, yada, yada. So there's all kinds of ways that you can kind of do mental gymnastics and say, well, I mean, I don't know, maybe it did, you know, and you could be going back and forth and humming and hawing like I do and say, well, maybe it did because this is a previous top, and maybe it's like checking like a bigger support here, bigger creek here. And I would say, yeah, probably. And it matches up with some of the moving averages and stuff like that you can find. But I mean, on the whole, that the question we're asking is about all-time lows. So let's just consider it did break down. What could happen? Well, an S-curve would get you really low. Like it would give you the new all-time lows. It would get you back down to your 190s or whatever. Okay. And the longer this takes, the longer this kind of drags on, right, without going back down to check the creek, the more problematic going back down becomes. It turns into a very, very deep drop, right? So like if this takes till FOMC to move, and then for some reason we don't get any kind of move back up, we instead drop. And yeah, you're right. The extended hours creek is different as well. There's a lot of little nuances. You can look at it. It's like, I think it's higher in the extended hours because of the I think it's higher, but then there's one creek here that's like really steep. It's like this one. This is the one that I think Pantano was looking at because he's got a few on his radar, but he's looking at this one and probably the other one right here, and they're intersecting pretty low near next earnings. So if we were to go down into next earnings, that's where they would pretty much be, is like 190s or something like that. So technically, is it possible? Yeah. My point is that this region in general is is absolutely a possibility if this can find a way to continue to distribute through the current supports, right? So that's the ones that we're kind of keeping our eye on right now, are these 430 levels. That's why I've got them kind of marked off on my chart. That's why I'm thinking we're going to go back down. I think it's a big test. Now, if bulls don't want to do that, and if there's a bullish operator here who's like, nah, we're not going to give bears the chance to get out of those low positions near 430, and we just had another breakaway gap, sure, like this doesn't even have to come down and make a new low in this local range. It should just back up to the creek here. It could back up to like this bottom at like, 470, and it could be making a higher low and then advance. It's not out of the question. This could be like a widening that breaks out. There's all kinds of cool patterns that the stock market can do, and it's all a reflection of what the operators that are driving the price, putting the most money into it, want to do. Is that possible? Yeah, sure, it's possible. It's not super black and white. There's a place here in which I would say, no, it's not possible. And that's like if it comes up and it rejects again at 481, I think you're going to see a hook. But if it were to like come back above and hold and then push, sure. And that could happen as like into Monday or something, pigeonhole into here. In fact, I would say that's even probable, So like we look at these things locally because that determines a lot of what happens on the bigger picture. You lose this little area right here. Well, yeah, you've got a gap below, but not only that, but you didn't check any of these creeks. We didn't check anything down here. So this breakaway gap suddenly becomes invalidated if you distribute locally, because then you're like, well, crap, now I'm going down to fill a gap, but it's not just that. Now I'm also going down, potentially I have to deal with a creek. I've been very optimistic that the creeks are more or less these parallels, but you can see, like looking backwards, they're not, this area is different. Like we did not do that. Did you see what the difference is? Like we laid up on all of these, like one after the next, after the next, after the next. Even here. This one we laid up on, but it's like, if you look at the overall kind of structure of it, it's so low. Like it's so low. Han Solo. Sorry. It's way down here, right? And that's real low, right? So it's like, it doesn't even look like you've come remotely close to sort of checking it. Now, I think that, we could be, again, kind of optimistic and say, well, maybe it just kind of double bottoms or goes to that 403 mark. Remember, that's the 786. That might be a better place to hit. And then this could be a big widening. And then it could end up breaking still back to the upside. That's not impossible. But yeah, as soon as it loses that level, if that were to happen, this is where I'm going with this. I don't foresee there being a lot of other great stopping points. I think we could stop at the top here at like 350. That could be like a new place where we camp. This is where you might get something where maybe there's a creek support here. We find the support and then it goes. All of these are possible stopping places. I'm not going to say it's inevitable though, because we don't know. So his idea of it's possible it's not all-time lows is not unheard of. But you can get a spring that goes to like the $3 area, even if this did come down. You can go to get a spring down here that fills the gap and test that creek without making new lows. It might seem impossible that would happen, but It's not, you know. And then there's a question of like, it's not impossible. So I feel like it's very possible that you could come down here, hit the creek, and not make a new low, or at least not immediately. There's a longer term kind of a working out here that you could see, like this could cause you to come back down, and maybe over time, you know, you do get a new low down here. And one of the things that did kind of raise my eyebrow when we were back here was the lack of trading in the low region. Really this little pocket. So like, you know, we talk about shallow S curves and all that junk. Could this get you to a new all-time low? Yeah. You know, could it do it so it's sort of happening near and around the next earnings report? Possibly, you know. I don't feel like it's that weird to say like, sure, it could happen going into next earnings that you're at a new low. But it's a little different than some of the previous setups is what I'm trying to get at. There's not like I don't feel like there's a precedence here to drop significantly low, which means to me it's not like a distributive action in that way. Even the 50-50 here, which is still low, you know, this is probably, again, what he's looking at is like a 190. He's looking at that as like, oh, it's going to go down to the full S curve. Well, even that, it is a new low, but if you look relative to where we were before, it's not like in March when we dropped and we were like dropping through in like a really, really, really low range by comparison to the previous. And yeah, I mean, I don't know what to tell you other than like my original idea this year was like we would come up to like 14 or whatever pretty early, somewhere around here maybe, and then if it worked out, right, it didn't work out, but then you come up to like 14 and then you drop back down and you go real low. We came up to like 12. We didn't make the advancement. We failed, and then here we are later coming up to 14, and I was saying, you know, come back down real low. It's definitely a possibility from a technical standpoint. So that's why I'm not like sitting here loading up constantly, because there's a super strong realm of possibilities, of various possibilities here. We haven't made any kind of advancement yet that makes me think that it has to go, or it's going to go really far. We just haven't. There's parts of this that look pretty good. There's parts of this that just I don't like. I don't like that this advanced the way it did here with repeated up thrusts. I don't like that it then made a new low. We didn't actually hold the bottom. I don't like this double topping action right now. It doesn't smell good to me. I could see why this would be an easy one to use to scare retail, because this is quite similar to some of these other motions we've had, like this guy back here. You know, it's a really similar motion, isn't it? I mean, it just is. Hopefully I don't need to point that out to anybody, that this kind of crud has happened before. You know, and maybe we're waiting to see if there's some kind of dilution news again, that he's going to, you know, sell again or whatever. If Adam Aaron's smart, he won't do it right away. He's got enough cash. Like, he's not really interested, I guess, in keeping the stock price where we want it. So yeah. So like this kind of emotion, this kind of motif, I don't think you should be afraid of it, because there are places where this can be very bullish. You should just be really cautious and be aware that this has happened in somewhat similar fashion before, you know. And again, are there differences in these two areas? Yes, there are. Like, for example, like one of the things I would look at is this as a double top going up. How high did it go? Ours stayed really flat. And then there was no drop here before another advancement. You could argue, well, that just could be this guy that's a, you know, UT and then a UTAD. Yeah, but it's mildly different. It's not exactly the same setup. My point is that I was looking at this earlier today, and I was just trying to get the point across that like the motif that folks are looking at here with that GME move is not one size fits all. It's not some kind of like magic bullet. Like this is, I mean, I openly just kind of disagree with that. So, and it's not me being arrogant. It's me just, frankly, I think it's just using past examples to say like, no, like it cannot be, you cannot have a universal belief that that's it. That's the only thing that can happen. You just can't. And even before we, there wasn't really a way for me to know this was going to be some kind of breakaway gap. There were some signs here that were positive, like the early break right here. That is a jump over that local creek. And I think that there were other things here, like the support that was found at 2290 above the highs here. Those are things that were indicative of a possible run that I just missed. That's just on me for missing it. But remember when we came up here and I said that this seems also like a possibility that you basically have like a regular cat ear kind of structure, and then potentially this drops low. Like that's the same exact concept that we're talking about right now. Is like we're still looking at the same things. We're just doing it in a different place. So I'm not in the never in the mindset that, and I don't think it's wise, I'm not in the mindset that this is somehow like set in stone, like it has to go up because GME went up in this particular situation. These are a dime a dozen, man. Like these setups, we just saw one right here. Pushed low, made a new high, and then it ended up distributing, right? Like they're everywhere in the market. So I'm of the opinion that just because one goes up does not mean that somehow the rest of them do. And I know it's a Debbie Downer kind of thing. It's critically different. And there's so many different ways to look at this. You could look at it like we did, like a diamond structure with a breakdown. You could look at it with like a pennant. You could look at it not so much as just a pennant, but like a narrowing range above a support or below a support, and then see where it breaks. You can look at it with Wyckoff lens and say that it's got a UT or it doesn't have a UT. You can look at the volume in relationship to the price and say, is it distributive or accumulative? Dozens and dozens of ways of looking at the same exact stuff. You can look at waveforms and you can see where those cross sections are and see where the breakdowns would be and mark off where the supports would need to be to break to the upside or the downside. All that stuff is good. I think it all helps to help make a determination, an aggregate collective determination of direction on the end of those kind of structures, So yeah, I am concerned about this being a potential downside target because look at it. I mean, on the big picture, there's a head and shoulder here that's very elevated, There's clearly like been some really good bullish moves, in jumping over certain EMAs. That's not in question in my mind. Those are things that I'm just kind of looking at with cautious optimism. I don't want to be Mr. Bear all the time. I just don't want to lose money. I'm sick of it, I'm sick of AMC rug pulling. I'm not going to do it anymore. I'm not going to be made a fool every time that you think there's a run and then it doesn't run. I want to at least be aware of like where the possibilities are. And I'm okay with being super bullish in a setup that's super bullish, that looks clearly like it's about to have a big pop. Not okay with being super bullish on a setup that has historically gone either way. I'm just not okay with that. I think it's a really silly place to be. It's not wise. Because I'm going to look at this and I'm like, yeah, We're just talking about this same concept here. So how can this work in your favor? How can it not work in your favor? Well, look at MPW. Because I just talked about this bottom on MPW, and it was a successful bottom, and therefore it ran back up high again. Though it's not proven that it's going to continue, the point is that that's the same motif right here. So I can find an example that goes either way, but there's really only like a couple different ways this typically goes in terms of like bear bull, right? That's always the simplest way to look at it. But this is a good example of like, here's one where it comes back down, doesn't make a new low, and then it advances again. That's the situation that I'm talking about right here, that for AMC, you know, you could see this come down and not make a new low and then advance again. Doesn't mean it's going to run necessarily. I mean, there's still things that have to happen in terms of creek jumps, but it would be a more bullish setup. Then likewise, there's dozens of examples where you see this it does come down lower. March is a great example. These other previous like little motifs where it sells off. We're looking at this guy as well. I mean, there's all kinds of ones, and there's different ways it can happen in that motif, but like this is a simple one to look at, right? Where it does come lower, you know? Okay. So how do you know, you know? Well, we're at that point where we start knowing. We're at the middle cat ear part. We know that if it breaks down here, we're probably going to head low, and then we're going to have to find either support on the creek or higher. And we know that there's situations where this motif breaks to a new low, right? Just like it did here on GME. And then there's other situations where this motif doesn't break to a new low. Sometimes you get a you know, a move that is quite bullish, doesn't even have any kind of real move down. I'm using a pattern. I mean, most traders, or a lot of traders, won't even bother looking at this pattern like it's some kind of a setup that has to happen every time. It doesn't have to happen every time. I mean, there's other patterns, obviously, in the market. But this particular pattern is an easy enough one to see on the bottoms. That's why I use it a lot. And it's all over the place. So is it 50-50? No, I don't think it's random. I think it has to do with the setup. Okay. So right now, do I think that Pantano's thesis that it has to go down lower to a new all-time low, or that it will, or he thinks, maybe he does not say it has to, maybe he just says, oh, I think it will. Do I think that's reasonable? Yeah, I think it's a reasonable thesis. I think it's possible. And what we might see is that this actually does come down to a new low, and then the RSI is really divergent, and then you get a massive move, right? But I also think it's a possibility that we come down and we don't make a new low. And that, therefore, I'm not like of the opinion that it has to be this way or that way, you know what I mean? That's just kind of where I'm at. Because this kind of a setup, to me, is also really bullish to have it kind of return and then just go back up. Really, really positive. And there's been times where that's happened. No, about 30 more minutes or so.
Yeah, that's almost done.
Okay. Right. Why not switch to a stock with a different record? I play all kinds of stocks. I've got positions in, I don't know, maybe 10 different securities, but that's about as much as I want to do. And also, the fact that AMC does underperform doesn't mean you can't trade it if you understand it. And I find it to be at this point, I find it to be a fairly predictable stock. So I'm able to get price targets pretty simply on this for the most part. And I know what it looks like when it breaks down versus breaking out. But do I think that it underperforms? Yeah, it does. Well, who in their right mind, from a bullish standpoint, would look at this and say that it's not underperformed? You know what I mean? Like, it's been in a downtrend for like 3 years. I mean, it's not. These are massive upswings. They're like 100%, but they only happen every like 3 to 6 months. I mean, it's not. It doesn't take a rocket scientist to say like there's very little upside to trade on AMC in terms of big moves, and there's not like a consistency in upside. But I would say also that there's not a lot of stocks out there that do run 50%, you know what I mean, over a few weeks. So I mean, that's a pretty massive move. No, don't get me wrong, there's some big ones that do, but in terms of like cheap stocks that can run really far, really fast, 50% moves are big, and there's a lot of 50% moves on AMC. So the swings here are magnificent if you can play them. But in terms of like just being a bullish stock, sure, it's underperformed. I think we're in a bottoming action here, and there's a lot of questions about maybe where that goes, but yeah, I'm not bearish, okay? And you might think that this is like a bearish outlook. I'm not really bearish. I think that this is still bottoming. So even if it did come down and make new lows, like I'm not going to cry a river about it. I'll just be like, okay, this is what we're doing, And then you wait for that next place where you can load up and you see that next build out, and then you go, What I do know is that this motif typically plays out on a sort of a falling S-curve, and that the resulting action is either here, right? And then you typically will, no matter what, come back up to meet the that like hook level. That's your level of I don't know what you want to call it. Ignore that line. I don't know why I did that, but this guy, right? Your wave. And if you may not think that's the case because you're like, well, some of these waves like back here never got touched. Well, not yet, but there is a very strong connection between what we see as those waveforms and how these things have broken down versus like the waves that as you come back up, like where do they go? They always come back up. Even if they're like going to distribute, they almost always come back up. So even in the event that this were somehow bearish long term, the way this set up doesn't make me feel like super downtrodden about it. I feel like the current setup here makes me believe that this is pretty steep. So in the worst case scenario here, let's say it came down to like 190, okay, and then you're like, oh well, it's over. Well, I mean, in this particular situation, like I don't know exactly what it would look like, but maybe something like this. Even in this particular situation, you could still see it come back up to like 9 or 10, which is still massive moves. It might take longer than that, but this is a really fast move, so. I don't know what operators have planned. I do know that even on the micro, though, that doesn't necessarily make sense to me. And the main reason is because we haven't seen those moves on the biggest picture. So I know that I'm like talking about here like a 7 or 8 month period of time, right? And even if you're thinking like, well, that would be horrible if this was distributive. If you did this and then came back down, would that mean you're going to come to $1? Maybe. If the shorts, y'all, if they want to like bankrupt the stock, like that's what they're going to do. There's a lot of shorts in this play, there just are. So if the goal is to kind of bankrupt it, maybe the goal is to keep it pinned at $1 and like screw everybody over, you know. But I do know that like on the big picture, that those bigger moves, like they haven't happened yet. So that's kind of where I end up being, I keep defaulting back to like, at this point, I'm pretty bullish because yeah, like on the micro, there's sort of this uncertainty, and even on like the 6 or 7 month time frame, there's a little bit more uncertainty. A lot of it depends on certain actions that are taking place. But on like the big picture, huge picture, I think it's harder to make an argument that it just stays trapped real low, like forever. Because there's all these like massive creeks from like way back here. You know, we talk about this almost every day now, it seems. There's all these massive creeks from like way back here that just have not been met. And if you're looking at this like it's some kind of a, you know, 50-50 or whatever, there's not a huge difference at this point between a new low at 190 versus where we were before. And most things seem to indicate that we may have already hit the low, or maybe really close to hitting the low. Because if you look at that 50-50, it's right on that marker. And that's the marker right here in the center. It's one of the first ones that I drew out, thinking that probably is, because it's the curtain rod drop, right? That's probably the edge of the cat ear, which means that's the wave. So I don't personally see a whole lot of risk long term in anywhere near this bottom, all the way up to nearly, you know, $100 or maybe even more long term. So like, I think it would be silly to say that it's not going to ever return there. Just based on what we've seen, that doesn't make any sense. Even in a distributive action, it probably would go back up and redistribute up in this region, at least somewhere along that arc, which is what happened in August on the back on the big picture. If you look back, that big push up and then it came back up. It didn't ever make all-time highs again, but it came way back up. So my thing is more about timing, right? Like you don't want to enter and then sit on calls for a year and then you have to roll them out or something. If this could take multiple years to happen over time, there's tons of trades that could happen between now and then. Yeah, I could just buy a bunch of positions and keep most of them. Maybe the ones that are really long term, I can keep them and just kind of sit on them and not do anything else. But for the most part, I'm thinking there's going to be a lot of these big 300 to 400% moves over time. You know, I don't think it's going to be one massive move. But if you're looking at a rotation, I could see why that you might think that, like a similar move that's back here, you might think that needs to happen now. My thing is like, I could see us getting to like 20 this year and then coming back down. And then doing a later move back up, you know. What I can't really easily see is never coming back up. Like, it's just hard for me to even imagine with the way this is set up. And the gaps that are there. It's just kind of like massive signposts. And I know there's a reverse split, but crazy. Why don't you get a toy and play with them? No? Anyways. I think it's important to kind of look at this structure, see how maybe you could read it, understand like where those angles are. Like the big thing with these guys is always that cat ear. It's the same thing I just showed you on the other one. It's always this guy right here. It's the second ear. So from the bottom to the second ear, sometimes you can do another estimation from this bottom through the second ear, but that just gives you another trajectory. You know what I mean? But it's always this. It's always this guy. It's not arbitrary, right? Because it may seem like, well, that's just some weird rule that you've magically found. No. It's not. It's not there's nothing magic about it. It's very simple because that second cat ear that we look at the little paw in the cat ear. The second cat ear is always if it breaks down, it's always the hook. So it always defines like the last point of supply, like that last point where you had support rather, and then it drops, right? And that becomes a supply point. And so when you look at the wave, it's really simple because you're like, oh, well, there's the bottom, right? And then there's the point where it dropped off. And so when you come back later, you're like, oh, yeah, that's if you can get the push, that's where you should go. You should go back to that area. And then again, there's lower ones you can pick because you could pick like a trend instead. And sometimes that's a little more accurate. The trend might give you a little bit of a more conservative guess that's more accurate because the extensions here can be irregular. They can be a little high or low. You know, they don't always have to meet the target perfectly. This is the same concept though. It's like you're going around and then back up to the upside, right? You're coming back to meet that trajectory. This is where the bulls are trying to go. If there's a spring action, in this case, we got a nice little RSI divergence, right, with a higher low, but it wasn't, maybe not super clear, right? You could tell with the volume and all that jazz, it was probably going to have some kind of reaction, but it wasn't super clear that it was be really strong. It doesn't really matter. Point is like that's the way you can easily establish possible future targets. Pretty straightforward. It's the same thing on every single setup, right? So if I look back here, this previous setup, I think that it was met, you know what I mean? I think it's a trickier one because this one doesn't have like all the markers that we want it to have. And if you go back and you try to find the low, it's like, well, I don't know. This was like way back over here. It didn't do the same thing. It didn't bounce down. And that's where like we can look at like nuance of the setup. You know, I would have said that's probably a more conservative trend to follow. It's still a really big target, you know what I mean? High target. Because I believe that the market, it's not predetermined before you get there necessarily, but as you're going through these motions, you're using past levels. So there's a lot of things that as you start moving from level to level to level, you're going to be looking at past trajectories and past creeks and all that stuff. And all this stuff builds up to from a micro to a macro level. And the micro is always informed by the big macro movements. That's just a way of understanding possibly how the timing might work out and all that stuff. But like, that's why this kind of stuff that I'm looking at makes sense to me because I'm like, well, yeah, it would make sense that if we were to break out here, we'd come back up to 6 because of this trajectory. It makes sense if we break down here, we'd come back down to 460s again because of this trajectory. This is sine wave analysis that's kind of married with a fractal analysis. And the cool thing about that is that as you do it more, it becomes easier to kind of identify bottoms, tops, and that's what you're looking for creeks. But that's the creek as it's setting up within a wave, and it gives you a sense of future targets pretty easily without having to do a whole lot else. I do all the other stuff because I like to see as much as I possibly can to make sense of it. But 99% of the time, if I've done the creeks correctly, the EMAs, the volume, all that jazz kind of lines up. So from here, like I'm looking at this like, yeah, I think it's probable that on the big picture, we're going to come back up here in the future. I think the challenge isn't that so much as timing. Timing is really tricky. So, and I don't know. I don't want to like repeat the same thing I repeat like every day and go through all of it all over again. But it's difficult to do, I think. Timing, I mean, because some of these waves, it's like for example, the one in August, the timing of the trajectory out matches the timing of the trajectory in. It's really straightforward, and then you can find the middle of the sine wave kind of between the cat ears. and it ends up being like kind of a center mark like right here on the center of those ears. And I don't know exactly what it was about that setup, but that setup is like really simple. It like made sense. There's other setups that don't seem to make as much sense to me. And timing wise, I get kind of like lost in the weeds and I'm not really sure. So I've looked at this big picture like a number of times and there's things about it that I'm like, I don't really know. You know, maybe I don't really know, you know, like the timing of it just seems like it would take forever. Like it would be ridiculously long-winded. And then it's hard to measure how, you know, if you're measuring from like a bottom versus measuring from like a top, if that's more accurate. So should I be measuring from here or should I measure from the place that it broke down? That might be more accurate. For the most part, I'd say this is probably the most accurate that you could probably get is right here to like the center of the cat ear structure. And then you have to debate where that is. I don't know. I think there's a pretty big window. There's no doubt in my mind that there's two major kind of end spots I would use. I probably wouldn't go any earlier than October of 2025 if I'm just, again, just measuring out like the wave. And I probably wouldn't go any later than here, December. Those are really big. That's a year difference, you know. But that's because we went sideways for months and months and months. So it's hard because there's a that's as late as I would go, and I'd probably even say that that's probably not good. I should use the middle of that smaller one here. Maybe more like July of 2026. I kind of narrow it down. That's it. Like that's where I think the window is. And I've talked about this 107 a little bit. I think that's very likely that that's where the goal is. It's kind of the previous old school support. It makes a lot of sense from a technical perspective for a lot of reasons. But that's a crazy high target, right? And there's really no telling like how, if this goes lower, does it change everything? Probably not. But it would also make it like, could be really different. You know, this could take 2 years to, I mean, really it is like 2 years. It could take like 2 years before it actually breaks out, you know. That's just, it's just things to consider. I'm not of the opinion we don't get that. I really am of the opinion that we get this. And when you look at it in the big picture, it makes this kind of daily price action seem kind of frivolous. You know, we trade or we don't trade it, whatever. I mean, the bigger move is the move that you're trying to capitalize on. I don't think institutions are going to give you all of that move all at once. That's very unlikely. They don't need to do that. They can make way more money messing around with you for years than they would just pushing it straight up. Retail wants the 10,000% move or 4,000% move. But institutional traders are going to make way more than that, exponentially more than that potentially, you know, multiples of that by just chopping it because they can work against retail. They can loan out shares. They can short it. They can go long when they need to go long, but ultimately, like, they're going to make a lot more setting up all kinds of crazy traps for retail and yeah. So the YouTubers that make that end up making you really excited are the ones that say like it's probably just going to run straight up, you know. And there's part of me that thinks it's a possibility at times. Like, I mean, $21 from that bottom is like 900%. But the concept of running that far without any kind of reaccumulation is really dumb. It's just dumb. It doesn't make any sense. It just doesn't make any sense to me. So I mean, I understand like where people are coming from because they're just thinking like, well, it's a squeeze, who cares? But I think the market cares. Like the mechanics of the market don't allow it to happen. The mechanics of these algorithms that are traded don't do that. They're not they're not looking for those kinds of moves. And the funny thing is like that time for AMC, though I think from a technical perspective, this has the ability to go way up here. And by the way, we will get here at some point, in my opinion, and if and when we do get here, you're going to have people saying that this is somehow a squeeze that was uncontrolled and TA doesn't matter. And they're going to say the same thing that they said years ago and all this other stuff. And all I could do is look back and be like, yeah, well, this target was a target we had in mind anyways. And the same thing applied for GME because it was like they were saying, well, Keith Gill did all this and blah, 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 blah. And I'm like, what? Like there was a technical setup here. It broke some levels last minute and then it ran up to a 618 retracement. It's not like the guy could manufacture that. And not only that, but he didn't even buy like this move. Like this wasn't him moving it. So you're telling me that retail just stopped it right there and like, give me a break. You know what I mean? Give me a break. It's silly, So I'm not like I don't believe that everything in the market's like predetermined. I don't, but I think that there's levels that are established and trajectories that are established that if the conditions are right, they're going to be met. So this is one of those levels. And it won't matter to anybody at that point. I'll probably be, who knows? I might not even be here at that point. But like that kind of a target long term from a technical perspective will be explained away as some kind of meme stock craze or yada, yada, yada. Whenever it happens, it'll be like, well, this was not possible, blah, 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 blah. And I'll just be looking back like, yeah, all right, well, 2 years ago or a year and a half ago, we measured these moves and they happened. And now mainstream media is going to say that it's just a bunch of overpriced garbage and that it was completely accidental and it's going to get shorted. And it probably will get shorted again to death, but like, that's the narrative. It's always like, oh, you got lucky. It's like, all right, whatever. Whatever. Like, I didn't set this up. This is like one of your Black Rocks or whoever. It's just stupid. You don't even point the finger at the right people. And I think I'm not saying like I'm not pro like hedge funds or anything like that necessarily. I mean, obviously a lot of people have their retirements in those kinds of funds and are managed by those companies. But it's not like I'm like, oh, we should get rid of all these, I mean, you can't really do that right now at this point. There would be so many people that would lose everything, not just rich people, but like people with retirements and all this crap. But at the same time, I'm like, so I'm not saying like, anyways, I don't know, but it just seems like really bizarre to me that they're never given like the blame, or we're never told by like mainstream media that like in general, right? You don't see those headlines like, well, BlackRock ran the stock up 400% today. Institutional traders be crazy. Nope. It's always retail is a bunch of idiots who got lucky. You better get out of this if you're smart. You know what I mean? Like, I'm like, what? Oh, okay. You're owned by BlackRock. Okay. BlackRock be crazy. That's the new thing. Yeah. Oh, yeah, man. You're welcome. It's been a long time, I know. I should thank you all too, though, because I wouldn't be here doing it if I didn't feel like it was some kind of a community effort. It would feel pretty pointless to me. You don't have to do this kind of stuff to trade. So, like, if there's ever a day where I don't stream or whatever, or there's ever a time where I don't stream, like, you don't have to have that in order to trade effectively. And if it's not like my job, but if it were, if I were to stop doing it, then my hope and my prayer would be that you wouldn't need me anymore to do it. You know, like you could. It's kind of like when you have anybody who you listen to a lot, you tend to like start knowing how they think. When you spend time with people, you kind of like, I think this is how they would react to this, or how they would think of this. What would they be looking for? It's a apprenticeship / mentorship mentality of you learn something and then you just kind of move on and you do your own thing with it. But you have that kind of extra knowledge base. I think that's the goal. That you would not eventually not need any kind of a teacher. And I'm not much of a teacher. I just kind of use what I know to help learn, to teach and then learn more while we're doing it. So, anywho. Yeah, there might be something there. So we've got to move here to 512. I'm like looking at something real quick. I'm going to check it out, but I'm going to do a really quick recap because my time has come. I told my son I would stop a little early today so that we could have some playtime. And it's summer, so it's like, it is what it is. It's going to be like this all summer. There'll be days that I'll stream like most of the day, and there'll be days where I don't. But I want to go ahead and take a look. So this is kind of interesting. So there was a bit of a double bottoming here. It has not done anything particularly bad here. And I'm kind of curious because it looks like it found support on the previous bottom at whatever this low is, 498. 4555555 502 55. So there's a bit of a wall at 5, which, you know, makes sense. And then 497. Right. So this is what I was saying earlier about the phase B stuff. The reason this kind of confuses me is like from a sine wave perspective, I feel like this was the cat ear and it broke down. I think that's kind of apparent. But I also think that it didn't technically go above the buying climax, and that makes me curious because they both hit 531. So like the reason that makes me curious is that that's not really an SOS. It looks a little bit like a UT, but it didn't actually break the range. So I was talking earlier about how I am hedged for this, but I'm not against the idea of like going higher here because there's a bit of uncertainty in this. So if this had come a penny higher and then broke down to new lows, I'd be pretty darn bearish. I was bearish on this price action because it upthrusted and then dropped the creek, the uptrend. And then it came down and it did make a new low. But in theory, like because this didn't come higher, they didn't actually, nobody tried to push resistance. It just got met again, just tapped resistance. I don't know if there's some kind of rule about that in Wyckoff, but that's a uncertain move. So let me explain. If you have an upthrust that goes above like a previous top, like an auto reaction, for example, at that point, what you're looking at is usually like a phase B. And if this had been like a bottoming range, what we would be looking for is that preliminary supply coming in, or support coming in rather. I'm sorry, the preliminary support coming in, and whether it kind of breached the preliminary support or not, and then what happens after that. But in this case, you've got a buying climax, which means that you've come up high. This is the auto reaction, right? So in a lot of ways, it doesn't really give you an answer because there's no, until you interact with the buying climax on a distribution or reaccumulation, there's not really a one size fits all. You can have a build out between the buying climax and that auto reaction in various ways. So like, I don't know how to explain it because I'd have to go like pull up a bunch of diagrams because there's more than one way this could work out. But like, I guess what I'm saying is if this had come down and then this broke back above the buying climax and then sold all the way back through, I'd be almost 100% positive that there would be no way that this was going to run again. Like I'd be very, very concerned. But as we saw yesterday on GME, sometimes those moves, they can be really slow and they can take a long time. And like this did do that, and it did sell back down, and it did go beneath this little local range here. But ultimately, it just did a retracement, and then it changed direction and went back up again. And it just looks like a topping action with a backup that went to, previous creek and then left. But like because this didn't come above, I don't want to give you like false hope here, but because this didn't come above, it's possible this is not an LSPY, and that it could be recovered and go back up because technically, yeah, I don't know. It's a tough one. Technically, it didn't break the buying climax. I guess that's really all there is to it. So it may not have been a proper UT in that way, in which case they're trying to confuse sellers, if that were the case, and buyers probably, with this motion to help disguise any kind of future action. So at this point, if we came back above and rode all the way back up, I'd be watching this ascending red line here because that's a possible waveform. So you see like where we drew it out earlier, we were talking about like, oh, if it turned back up, this is where it could go. Well, naturally, like that would be more bullish, right? If it came back up here, right at the top here, and then you could see an SOS, actual SOS. And there's so much stuff then at that point because you could be like, "Whoa, this is going to back up then?" I don't know. It could. You could say you could have a proper SOS and then still come back. There's a lot here, right, to work with. So if you really want to kind of keep it stuck in the mud today, that might be something that you could do and just kind of keep it from moving anywhere. Just continue to race around the creeks sideways. The more it works outward, the stronger you have, because your supports are all rising as you're doing that. So if it continues to work its way outward and upward, that's more and more bullish because you're going to be building up higher supports here that then you don't have to worry as much about falling way back down. On the flip side of this, if this is a sign of weakness and this was a UT, then a UTAD is possible. And really at that point, you're just looking again at the same levels. So that would be like it comes up, redistributes again, and then I know it could happen really low, but it could happen right now, frankly. But it could also be way up high. So it's the same deal. Then you just look at this creek. You guys are like, well, how would I know the difference? It's a micro move, It'd be really small. So if it upthrusts and then starts sliding, well, you're going to go back to the creek. Even if it's eventually going to be bullish, it doesn't really matter. As soon as it did that upthrust and slide, you're going to head back to a creek. We saw that happen like 2 times yesterday on GME, where it would come up to the top, and then it would upthrust, and then it would slide all the way back down to the creek. And it happened repeatedly until finally it broke to the really low creek and it went on like a 50% retrace. Ended up dropping the range to go down to check that, and then it came back up and left. And that's not really something that I can easily predict as a trader. So I'm going to look at it like one step at a time, right? So like right now, I'm talking about this stuff that hasn't even happened yet because I'm thinking about the rest of the day and possibilities. But I'm also just considering like basic stuff. You would look at this and say, okay, well, yeah, it made a higher high here, but if it rejects locally or if it does a little distribution top here, where is the next trend? It's pretty low. It's set up pretty low here. So, and then bigger picture, we would look at, and maybe it got checked when it jumped here. It looks like it might have right there. Please be patient.
I know, but I'm just telling you it's been 30 minutes.
I know. It's okay to hold me to that, but you need to be patient. Okay? So when I look at this kind of stuff, I'm setting up in this way so that I understand like where would we retreat to if we need to retreat. So I think right now what we're doing is we're jumping over this wave here. And it's looking okay. I mean, there's not a lot of selling going on after that initial sell-off. So it seems to be kind of building out. Potential bottom. I'd be really careful about the tops here. Let me see where that top is. I bet it's like 515. Yeah. So for whatever reason, when we came up here, so that's fine. So those checks have been made. That's a check. That's a check. There could always be a bigger check, but we could always draw that out if it happens. For whatever reason, we came up here. 515 was one of those early targets that we had. And I don't know. I kept marking it off and then taking it off. I'm not sure where. Maybe it was from this previous high. Something like that. 514, yeah. But yeah, we're kind of gravitating along here right now. So this ends up being like a pretty important, let's just call it like a center point for this wave. So yeah, I think there's a lot of possibility here today in the price movement. Bigger picture, just zooming out a bit more, we're going to look at 532, and then I would go backwards to a little deeper here. Like I think this has already been messed with. You can see like the repeated moves to try to advance early, but that doesn't necessarily mean it's completely gone. So you could keep this one on as a possible wave target for like later in the day. Someone earlier said like 570. That's way up here. I agree, that's a possibility because of the previous high, clearly. But also because you can see there's a lot of this setup that seems to be pointing to this top up here. So there definitely appears to be like a repetition, if you will. And it does beg the question, if you spend all day and you end up getting up here, are you going to redistribute back down to 450 by the end of the week? 'Cause that's where max pain was. That's pretty low, So that would require some kind of a hyper fast, like really fast distribution cycle up top. So basically just like an up thrust that sells really hard back down. It would look like this, but like really compressed. And that doesn't seem very likely to most. So then maybe the answer is that you don't actually come back to 450. Instead, you stay above 5. Yeah, so we'll see. So 570 is upper range. Maybe at that point it can hold above 5. It's hard to say. This is kind of another critical point. If it were to do that, so you've got like kind of 3 major points. If it rejects, it's probably going to reject here at 515 or slightly above. It would then start back downward, and at which point I think it's going to come really low. I think it's going to come down to 460s. Things are kind of strange because it made a double top, but it made a lower low here. So like it's failed to advance above 531. It did not fail to advance below 5. So 5 was tested and it failed. 531 was tested and it succeeded at holding back. So it's hard for me to be super bullish this morning for that reason. And then, the creeks are really low going down. I know they're really high going up as well, but it's that cat ear, man. It's like it's always going to give you both targets. You always have both targets 100% of the time. It's almost like a perfect 50-50, I mean, look at it. And that's totally normal. Like it happens every single time. So I just caution folks today, like watch your trends, watch your creeks. I think you've got this kind of open window here of possibility either way, but it needs to sort of hold. There's a decent little M shape right here. And I think that somebody's trying to generate the rebound. So from a bull perspective, this is like a low creek cross on a buy-in, low in this range, and then you're going to see it push up and then go try to gravitate towards that 570. From a bear standpoint, they've knocked it low, so this could be thought of as an LSPY. And then if there's a need to redistribute, they come back up above and redistribute and then drop it. Yeah, I'm kind of indifferent right now. And it's okay, if you don't have to trade everything. So, for me, it's like maybe I would trade the last part of this move, but if it went up and then if it went down, keep my hedge position. I think this is probably your creek down here, like around 496. It's that previous. Actually, it's probably right here. It's still that 491 level, I think. Yeah, which is funny enough because it's like equal parts again around the middle. So basically perfectly sort of back and forth across the middle here. I don't know. That doesn't really give me a good answer. But I can tell it's setting up in the center, which is pretty typical of an institution, to drive it back to center and then make a move. It sort of obstructs the overall picture and makes it hard to trade. So there's, I think Reese was talking about FTDs up at 470 and then potentially back down. I looked at this as more of like a probability high here because of the parallel and other things. And if you build out here, I think you are going to have a pretty big move to the upside. But I'm also kind of, the reason I've been kind of sort of bearish, it's not just because I said 520 and then back down. It's also just like the setup looks okay, and if it holds support here, I think you probably would move up. But I feel like there were some things coming up that just didn't really sit well with me. Like that divergence on RSI, maybe that was just an indication that it was flattening out, and that's really all we're getting. And then there's a lack of clarity on the bigger picture about the end result of this, and like it could be distributive up here at 470, and that would be really bad. And that just makes me think that there's a possibility that it distributes earlier anyways, you know. So it's hard to say. All right. So potential swing today from about 515 or 530 up to 573. I think there's a potential swing there. I think there's a potential swing down from maybe like $5 down to the 460s. And I think both of those are reasonable trades that you could make today. All I'm really seeing is that we've kind of worked our way out, and there's still upward targets today that point to near 570. And then there's still lower targets that point down towards there's quite a few of those as well. I wouldn't use that one. I'd use this one here. That's really steep, isn't it? Yeah. We don't have confirmation yet. Keeping it in the center purposely like obstructs the view. Like I'm looking at it right now, I'm like, it kind of looks bullish to me, you know. But then like all it would take is an up thrust and a big dump on volume, and you're just going to see it slide. So there's a mixed bag. And I'll be honest, it seems like the folks that were convinced we would go up high are still convinced we're going to go up high. So, I don't know. Maybe they were right anyways. I've been kind of in the middle. I felt like we were going to come up here and then chop down. Instead, we stayed up really high. So, it feels more bullish than I expected, and that makes me think that maybe it's bullish. Thankfully, I wasn't like going crazy, you know, over trading this, trying to like get every single move. I just played this move because I knew that was likely. And if you're in a position where you can't easily trade the moves the way you want to, then maybe the best thing to do is do nothing. I might just do nothing today. Just let it be what it is. Part of me always wants to catch like every big swing here, but you don't have to be that guy. There's plenty of opportunity to make money in the market. So, all right, let's see what GME did. That might give us some indication of direction, since we don't have a lot on AMC. And then I gotta stop because I gotta go. I told my kid I'd play with him. So, no, nothing yet. So this is making lower highs, which is actually good. So it hasn't done anything too crazy yet on this top. This didn't come too low. This didn't make a lower low. And then all it's done is jump this creek. So you might expect some kind of like a retest on that. There's nothing else to say right now. It looks fine, is what I'm trying to say. Yeah, maybe 38. I mean, if it pushes here, that's where you would probably go, because you'd go up to the top here. I don't necessarily think you go all the way back up to 40, but I think you probably get a decent little push to 38. So what I'd be careful of here in terms of distribution is it looks like we've done the jump. So I'd watch carefully. $33.83, $33.84, and I'd just be really cautious of that area. And then if it pushes above there and then comes back really low, you're going to watch this creek and the rising creek. If it doesn't push above there and it builds out first and then it goes above it, so if we don't get that breach too fast and it comes down low first, that's actually better. So if it came below like 32.10, this would be more bullish. If it came low here, for example, it could make an LPS or a spring. It doesn't really matter. And then it jumps another creek and then it advances. That's a really bullish setup. Does that make sense? That looks really good. But if it goes too early, like above, and then comes down and makes, a new low or even tries again, just be careful because that could be like your UTAD kind of thing. Usually there's a sign of weakness and I'm not seeing that, so that doesn't seem super likely. I'd be more concerned that it pushes high early and then just kind of breaks down like that instead of even coming back up. It's not impossible that it just holds like it just holds and goes. Like that happens sometimes if it's a really fast moving thing. So you just have to be careful. That's what I was saying. Watch that top. This 383 would be really critical. But this better setup here is really to take your time, because here you could come down and make a new low in a spring action and it would be really healthy, and then jump the creek and then you just go. That'd probably be the best case scenario like that. I think that'd be really strong. I don't like early advancements that then slide. They usually don't do very well. And then because you end up with this kind of stuff and then you're waiting to see if it's going to turn around. Yeah, so this is the ear. So this is where you would see the move down probably if you're going to get one. Or the early move up. So one push, and then there's an M cross, and usually this is where the second ear breaks down, is that trajectory angle. So kind of right where we're at right now. So it seems to me like more than likely whatever's going to happen today is about to happen like really soon. This GME is coming into the pinch point here. So what happened here is that it did a kind of a distributive action and it pushed to a new low. And I was saying just a minute ago that's not really ideal, but it didn't technically come above the buying climax, so I'm a little like unsure about that. I don't think it's necessarily bearish as a result. And then it did come down and make a new low, but it's been making higher lows, so kind of going to wait and see if it can breach here or here. There's a lot of little hot spots. One is right where we're at. I think it did peak above that top, didn't it? Yeah, it did. So this is like your ear. So we'll see. Okay. It's kind of a mixed bag. And I've got targets at 570 and 460. It really just depends on which way this goes. It's probably going to happen within the next couple hours. But I'm not going to stream anymore. I'm going to head out for the day. And maybe I'll come back on around closing. If there's more to talk about, I'll come back and do closing hour. But I'm going to take a break midday here. And yeah, I don't think AMC is way behind GME, but I don't like the idea that it's kind of following the same pattern in the sense of like, oh, it's back, really AMC's back here right now, and it's about to do this. Like, that's what a lot of folks are looking at. I don't like that. I don't think that's wise. This pattern appears dozens and dozens and dozens of places across the stock, and it does not always break out. So very, very, it's a very narrow view to say that it's following behind like that. And if you're talking about leading, in terms of like, day-to-day price action, yeah. I think there's a lot going on here about liquidity that AMC is getting like a sympathy move from. That's what they call it. That's different than saying like, oh, it's some kind of fixed algorithm that's a day behind, or I can't believe that. It's just not. I've been jaded enough and messed with enough by that concept that I just don't buy into it anymore. So if it goes up, it's because it breaks out here, and if it doesn't, it's because it breaks down here. Like that's the best way I think to trade it. So just be mindful. That's where I'm at anyways. You don't have to agree with me, but I'm not going to agree with any kind of a weird algorithmic tie-in kind of thing. I think it's, yeah, there's kind of a meme basket, and they do get sympathy moves from GME for sure. So watching GME can sometimes help you identify maybe possibilities. But you got to remember, like, GME was and AMC were doing really different things back here up until that move. So, like, really different things. So, like, we're very short-sighted, but there's a lot that happened here that AMC was not partaking in, you know. All right. You guys have a good day. I will talk to y'all maybe this afternoon for a closing stream.